All right, so let's just review the markets. We'll take a look at least S&P and crude. So so the first thing is to take a look at your levels, and I'll go into this a little bit deeper later on. But point and figure is phenomenal at support and resistance levels. I mean, I think it's probably its best quality. I know folks are like, focusing more on cause and effect and stuff like that, but the support and resistance and clarity of trend and clarity of support and resistance for trade location, etc., is something really amazing, um, and it removes a lot of pressure, a lot of strain in trying to figure out this level, that level, and all that crap. Anyway, so you had a rally here, as you can see, on the S&P right here, and then you had a pullback right there, where it says PB means pullback. So let's see what happened during the pullback. Oh, why is it not? Oh, there it is. So it hit this area when it was pulling back, right? No. It's not it. Rally here. This area here. So this was the pullback. Now here's the thing. Rally, pullback. Market really does work in that way, meaning there's rallies and pullback when it's trending, uptrending or downtrending. You do see that. The problem is many charts will confuse you, and here's a case in point. This right here was a pullback. See this? This is a pullback. But if you just look at the chart and the candles and all of that, you'll get very confused. Why? Because it looks like a break. It looks like something went on here and broke the low and made a lower low and all that crap. But really, this is just a rally and a pullback. But if you don't understand that, by taking a look at a chart that removes all of that volatility and especially time-based manipulation, over here multiple waves and corrective action, and the size of the candles also making it look bearish, but instead you just see it as a rally and a pullback to test the origin of the rally, which was right here. See that? That's the rally, and then the same area gets tested there. But if you don't have that in mind and you look at all the waves and this and that, it's going to be looking very bearish. But all this did was just pull back to test. And in the tape reading chart, you see a rally, and you don't see all the big red candles and all of that detail, making it look very easily as a pullback on low volume, where you have 48 volume on the up column and only 7 volume on the pullback, right to the area where it's supposed to go to. So, meaning the origin of the rally, basically what you may consider as a demand zone. And then from that, it rallied up. Now here's the thing, I'm trying to figure out what's going on here, because this pullback is bullish, rally, pullback. Now you know what's supposed to happen next. It's supposed to either move sideways a little bit or pull back one more time and then rally and take out the high. All right, but it's very whimsical over here, and I have to see what's going on. Till right now, it does look bullish, because I don't see any pressure on the red, but we'll see. So rally pullback structure sets up the trade to go long. If this was a change of behavior, it had decent volume, but not really a change of behavior. Probably because you need more waves and all of that and more of a trend. But you can see the pullback had decent volume. It had 1.62 times the average up wave here. So you have good volume coming from the pullback, meaning rally, pullback, and then from that pullback, bang, 152,000. So the buying pressure is there. And then after that, pullback test, and I don't know what it's going to do now, but it's too late to, figure that out. See you tomorrow. Same thing here on crude oil. Crude oil getting very interesting. It did set up a attempt at a pullback, but it just didn't work. So you have your rally over here. It's about $1,500 rally, right? On 149 volume, and then I'm seeing this pulling back here, and it gave a wonderful, as it pulled back, this is the zone, the white and the red, this is the zone where I'm expecting buyers to step in. It didn't go in the zone, it just touched it, barely touched it. I was looking for it to touch or go below 86.25, but it went to 86.32, about 7 ticks above, and then from that you had this change of behavior right here. And you can see very clearly 20,000 contracts. See that? So it comes back to the area, basically a support level, and then from there you have the heavy volume. Now what's strange is that maybe it's short covering, but they're not ready to go just yet. Maybe there's going to be a little bit more accumulation or something's going on, but they weren't ready to go. This is a clear change of behavior, pull back, test, right where it's supposed to, but it can't lift. So the pressure to lift isn't there. Only 5,000 came. After this pullback to test, which I thought was extremely bullish. Why? 20,000 up. Look how much volume came on the down wave. 3,000, 2,000. This is nothing. Nothing. So 20,000 up, 3 and 2 made a very bullish case for higher uptrend continuation, but on the up wave, only 5,000 came out, and now I don't know what the hell's going on. It's going back and doing all this crap right here. So I don't know. We'll see if this thing just goes crazy. Maybe it's ready to go now that it tested all of these lows. But until I see another bullish change of behavior or rally, I'm not touching this. Because if it's failing 1, 2, 3 times, then it gets into an extended consolidation, and I don't know what's going to happen. So I just need another up wave that shows clear demand breaking. And not right now, like at a time where there's more liquidity, but I mean, this is the place for bulls to defend. It was over here. Then it went even lower, didn't work. Now it's going and retesting that area. So something's not right. It should have, after this, 20,000 should have just trended, but it didn't. So something's not right. Anyway, so rally, pull back, right? Because you see the rally and then pull back into this area, the 31, it's 31,000, I think it was. Yeah, I think it's 31,000 contracts in this little brick, tested it, volume came out, 20,000, up wave, and then just went sideways instead of breaking out and giving another rally. Here on the ES, you had a rally, you had a clear pullback, tapped, and 152,000, and I don't know, just going sideways for whatever reason. The hell knows. All right. So this type of what happens is these types of trades, you're just going to be stuck in them and waiting. So just walk away. Either that, or you quickly move to break even, and if it works, it works. Otherwise, oh shit. I guess something filled. All right. Where was I? So anyway, let's take a look at gold. So I'm just going to take a look at gold and the metals. Basically, the metals are, I don't know what the hell is going on with platinum, but gold, you have another rally, you had a pullback, pullback, but the damn thing is not moving. So it means there's going to be sideways, probably reaccumulation, and then it's going to attempt to go, or it might fill in this gap here, which is a problem. And right now, you had some selling. So it's looking to take out these lows, probably 1419. This is a I mean, it depends on whether it holds the pullback low. If it holds the pullback low, I'm going to look for a reversal. All right, on gold. Again, the structure is very simple. You have rally, pullback. When you get a pullback, look for heavy buying, and that's it. Get in. All right, hold on. All right, so in my prior lessons that I gave, I explained the importance of trade location. And basically, trade location is a filter on is where you buy and sell. Okay. Now here's the thing that Wyckoff style traders just don't get. They don't focus predominantly. If you see a lot of the Wyckoff type analysis and all that, they don't focus enough on trade location because they're focused on behaviors. So they're always looking at this climax, secondary test, automatic rally, and then climax, automatic rally, secondary test, and then blah blah blah, and then the more important I think there's a climax, automatic rally, secondary test, and then they have all the phases and all of that, and then a spring, and then a more important blah blah blah, right? So this is an error. You need to always focus on trade location first. So if you see a lot of the Wyckoff traders and analysts and all this and that, they keep marking up the chart, looking for climaxes and high volume spikes and this and that, and then drawing the trend lines. And you got to ask yourself, why are you not looking at the trade location where you buy and sell first and foremost? And that needs to be framed out. Because you're trying to buy and sell. You're not trying to do analysis first and foremost. If you do the analysis, it's going to give a lot of randomness. What does that mean? It means that trade location is not only where you buy and sell, but it filters a lot of the random or ununderstandable random behavior. It has this. Always keep your eye on these two things first and foremost. On higher time frames. Always, this is where you start. Higher time frames, the trend and the support and resistance zones or levels. All right, that is going to tell you everything you need to know, or at least frame the context where then you can do analysis. All right, it is an error to go directly on a 5-minute chart and look for springs and upthrusts. It is an error to focus on this. It is an error to start labeling climax, automatic rally, like you see a lot on the internet, on the daily whatever, and saying this is a climax, this automatic rally, this is this, that, this is phase A, B, C, D. Okay, now let me see a point and figure, and I give you an 8-year projection, and we reach the target. It's all bullshit. All of it's bullshit. It's cherry picked, and you need to be able to focus on trading and not hindsight analysis. So the way that's done you use the higher time frame, and the reason is that even a small move on a higher time frame will hit the profit target on your lower time frame, even a little move. So that's why I use the higher time frame levels, and there's also more money on the higher time frame. So and also you're not gonna go crazy, because if you try to analyze a chart all day, you'll fuck up. You need to have levels, and when it gets there, then start looking for whatever it is that you are expecting to see and see if it's there and execute. Otherwise, you're going to be chasing and be pushed by FOMO and fear of loss and trying to break even and trying to this, that, whatever. So just start with the higher time frame and then start with the SR levels. And you have to know how to do it. Most of the folks, if you think this is the level, if you're looking for trades here in trends, this is going to be difficult. Like, it doesn't work like that. Yes, you can have springs and upthrusts and you can catch this. This is one area, right? But also when it comes to rallies, you want to look at the demand zones, as well as if you look at demand zones are origins of rallies. Supply zones are origins of down rallies. And springs and upthrusts against consolidations. So basically you have, remember this, you have 2 points, right? Let me just write it out. So these are your levels, basically. The origin of rallies and the consolidation or springs and upthrusts of consolidation areas or just call it of pullbacks. That also works. And 3 would be the test of ice and creek, or what we call the breakouts, test of the breakouts. So you want to always focus on those levels first. And everyone knows how to do that, but that is what you need to do instead of looking at a chart and doing this. Say you're looking at a chart, you say, oh, this is a climax, start labeling it. This is a change of behavior. This is whatever, without higher time frame context. Higher time frame context, what is it? Higher time frame context is position. And within excuse me, high time frame trend. So this is what you need to know first and foremost, and then draw whatever and all that. All right, so now I'm going to get to the second part. And all right, now this can be done many ways, but one of the very strong attributes when it comes to support and resistance, much better than the candle chart or bar chart, is the point and figure chart. All right, so the reason is it has an element of clarity that takes out time. When you take out time, you take out a lot of the little red and green bars and little waves. You can just see a column of X's. This, the way it's going to look on a bar chart or a candle chart, I don't know, it'll just look weird. But because it never looks clean. It never looks like this, right? Especially when there's a time manipulation and price manipulation. But the strong ability is that the point figure chart will just show you X's. Now here's the thing that's really, really important. Let's say all right, where is your support? Where is your demand area? Your demand area is right here. So when this happens, you should start looking for something, some bounce. That right there is testing support. Sometimes it will test above the high, sometimes it will get wherever, it may get into the high at the same level, and then sometimes it'll go here, then might do a little bit of this, and then the next rally. And your objective is basically to catch this. Okay? So in order to catch that, typically it needs to pull back into this area. Why? All the orders are taken out, cleaned out, filled up, tested, and boom, rally. So the strength of the point figure is this. This is a stronger attribute, in my opinion, than that cause and effect. Cause and effect, I know everyone uses or tries to use point figure for, but this is a more frequently used and quite reliable. So the support and resistance trade location from point and figure is amazing. It's reliable. It's good. It's good. All right. And the second important thing is that those levels can be automatically plotted. It can automatically be plotted. You don't need to do levels all over the place. They can be automatically plotted in a way that is much more difficult or challenging on waves and on the bar chart or candle chart. Much more challenging. All right. So this is a big benefit of point figure. Right. So if you don't know about point figure, go look it up. And after that, if you put, instead of XSOs, put actual volume prints, you will be able to see that it's pulling back to test the high volume boxes. So for example, this O right here tested this area. You'll see that this area where the X hat is actually very high volume, and it pulled back to test it, and then it goes. So that's the point that I'm trying to make. It's excellent, can be automatically plotted, and has the benefit of both vertical and vertical volume and volume at price. As you can see here, I have volume vertically and volume at price. See both, you know. All right, so that's all, folks. Take care.